Hi there, welcome to Kneppy Invest. On October 17, 2023, I released a video titled The Importance of AGMs in regards to an AGM held by Bapcor, where the share price of that company fell by over 10%. And the reason why AGMs tend to be fairly important is because they're typically held about 3 or 4 months after the end of the financial year. So after 3 or 4 months, management of companies should have a fairly good idea on how the company is performing in the new financial year. Hence, they will typically release a trading update when they hold an AGM. And if you know anything about me, you will know that I sincerely believe that trading updates are the most powerful type of announcement a company can release. And the main reason behind that is because it can change your expectations of the market in regards to a company. So sometimes you'll see the share price of a company rise 20, 30%, or fall 20 to 30% because of a positive or negative trading update. Now, trading updates aren't only released during AGMs, they're released all the time. And we're starting to see more and more companies release trading updates as we move further into October and then into November. And some people might call this confession season because some managements of some companies will have an understanding of how the company is performing, and they might be surprised on how bad or how good the company has performed compared to their expectations, hence trading updates. The most powerful type of trading update is either a profit upgrade or profit downgrade. So if you ever see the words profit upgrade or profit downgrade, expect a lot of volatility with that company's share price. And the reason I'm doing today's video is because a company called Credit Corp released a trading update on October 18. And you can see here, and I am recording this video at 3:10 p.m., so the closing auction is almost at a completion. The share price of Credit Corp is down 30.5%. So straight away, we know this trading update is fairly negative. You won't see a share price of a company drop 30.5% on no news. So this impairment of US ledger book, and so straight away we know this is going to be negative by that first word, impairment, and amendment to financial year 24 guidance. So amendment to financial year 24 guidance is a profit change, upgrade or downgrade based off the share price action today. It's a profit downgrade. Now, 3:10 p.m. So maybe the closing auction has come to an end. Yes, and the share price has closed at $11.97. The low of the day was $11.49. The high of the day was on open, $14.44. We'll have a look at the chart later in the video. But let's have a look at this particular trading update to see what the market saw and why the market has significantly sold off on Credit Corp today. So first, straight away, the impairment of US ledger book just sounds really negative. So the impairment will likely be reflected in interim financial statements for the period ending 31st of December 2023. They should mention anticipate impairment of the carrying value of the US purchase debt ledger assets. So if you don't know what Credit Corp does, they're just a debt collector, that sort of thing. And the main things I'm looking for here are changes in the numbers or expectations and the reasons why. So why is there an impairment to these US purchase debt ledgers? And they mention this in the second paragraph. The impairment has arisen from a sustained deterioration in collection conditions. So conditions are bad right now for Credit Corp. So more than likely, this could be short to medium term issues. So it may not be systemic issues to the company itself, structural issues to the company itself. It might be just short-term issues that eventually the company will work their way through. Fairly similar to what happened to this company during the GFC. Have a look at the chart for this company back in 2007 and 2008. You'll see the share price of this company significantly crater because conditions were pretty bad in those years. Now we get to the numbers right down the bottom here. I won't go through any rest of the commentary. So the numbers here. So on the left-hand side, actually, I might zoom in here. So on the left-hand side, we had the initial guidance released in August 2023. More than likely, that was when they released their financial numbers, which would have been the first few days, trading days of August. This typically is one of the first companies to release their financial results. And then on the right-hand side, we have their updated guidance. So PDL acquisitions, the same. Net lending volumes, the same. No change there. Profit, ex impairment, down about $10 million. And NPAT statutory, which is including impairments, down from between 90 million to be between 90 and 100 million to now 35 to 45 million. And earnings per share was going to be between $1.32 and $1.47, now between 5.1 and 6.6 cents. So this is why the share price of this company has dropped 30% in one day, because of this drop in NPAT and earnings per share, and because just a commentary talking about a deterioration in collection conditions. And the market doesn't know how much longer this deterioration in collection conditions continues. And the market tends to be fairly wary and risk averse. They don't like risk. So they see right now Credit Corp as having too much risk to have a position in, because there is a possibility that this could be first of many downgrades from the company. Now, there is a saying, downgrades comes in threes. So maybe this is the first out of a few, or maybe it's the only one. And that's the reason why the market is a little bit nervous about this company right now, just because they're not sure what's going to happen in the future around this company. But eventually, particularly if the share price keeps on falling, we will see value investors get interested in this company. Maybe they're already interested in Credit Corp. Now, on to the chart. We're not going to talk about Xtech, which is doing the complete opposite of Credit Corp. So Credit Corp, let's have a look at, let's go back to 2000. I wasn't going to show you 2007, 2008. And so I haven't really delved deeply into this company, but I would assume that this company, and we'll have a look at the weekly chart here, and I'm assuming that this company is quite cyclical, and this is just based off what happened during the GFC and looks like what's happening now. And during the GFC, look at that share price. So prior to the GFC, the share price of this company went from about, we'll say about 80 cents or below $1 in 2003 to a high of $13 in 2007. And then the share price dropped from 13 cents or $13 all the way down to less than $1 in about, so the high was in July 2007 and the low, almost the low, was in February 2008. So over about a 7-8 month period, the share price dropped from $13 to less than $1. So potentially this is what's going to happen with Credit Corp moving forward. But you can see the recovery in the share price eventually after the GFC, and the share price went to new highs. In fact, the share price moved to a new high in 2015. So if a shareholder who bought a high in 2007 maintained their holding in the shares, it was only another 8 years before they saw themselves in the green with Credit Corp. Now let's have a look at chart. And the other thing to take note as well is what happened during the COVID-19 financial panic. Share price of this company was completely hammered. Share price fell from $38 down to about $6 at the low. So $38 to $6. So the market was really concerned about this company in any sort of negative economic environment. And maybe that is what the market is thinking right now as well. And this very profit downgrade from the company is confirming the concerns of the market. So the share price and the chart of Credit Corp looks fairly negative just by looking at the weekly chart. It's going to look really negative simply because the share price has dropped 30%. And the last time the share price was this low at $11, or we'll say just say $12. And the last time the share price was $12 was back during the COVID-19 financial panic. But the recovery was fairly quick, a V-shaped recovery in the share price. So if we ignore the COVID-19 financial panic, the last time the share price of this company was down to about $12 was back in 2016. So we are talking about a 7-year low in this company's share price if we ignore back in 2020. So really negative chart. The other negative thing about today was we didn't see much of a bounce. Now, the share price didn't close at the low of the day. If it did, that would be extremely negative. But there was a little bit of buying today. Huge volume, understandably, today as well, because there's going to be a lot of people selling, a lot of institutions selling, a lot of fund managers selling, and possibly a lot of fund managers buying in because maybe they see some value and maybe they think the market is overreaction. And that's the question. Is the market overreacting? I don't know at all. I don't know this company too well, probably as well as most investors out there who might have a position in this company. But eventually, if the share price keeps on falling, eventually there could be some value in this company, particularly if this is not, as I've already mentioned, if this is not a structural problem with the company itself. It's just because of the economic conditions in the United States right now, and possibly even Australia. The other thing is, because of these deteriorating collection conditions in the United States, the market might be thinking, well, this is going to be true for Australia as well, because we sometimes mirror what happens in the United States. So maybe that's concerning to the market as well. But so how do I play these sort of drops in share price? I more than likely will just hold pat, just wait to see how the market reacts over the next few days. And it's really interesting because the video I did on the 17th was Bapcor, and Bapcor's share price. I'll show you Bapcor's chart right now. This is their daily chart. So Bapcor's share price dropped, was it 11.5%? So there could be some investors who saw that 11.5% drop in share price and went, oh, that's pretty good value right now. And the share price has dropped a further 7.5% today. And what's probably happened on the 18th of October, and maybe even overnight between the 17th and 18th, is maybe some institutions that have been holding, or who were holders of this company, saw the announcement, did the numbers, and they decided to sell today, and that's why the share price has dropped another 7.5%. And really interesting, if you look at Bapcor's chart, have a look at the weekly chart for this company. Yeah, the share price is at a really, it's just fallen, or is in a really important support zone between $5.40 and $5.60, because the share price moved to these levels back in June of last year, and then we saw recovery in the share price. But this video is not on Bapcor, it's on Credit Corp. And the most important thing, when you look at Credit Corp's chart, a massive decrease in share price today. And not only that, if you do look at the weekly chart, not a lot of support moving forward, because again, last time the share price was this low was back during the COVID-19 financial panic, and there was a rapid recovery. So I think there would be some investors who remember the share price of this company getting down to really low levels during that period, and they might be thinking now is the time to take a position in this company. So it's going to be really interesting to see how Credit Corp share price acts or reacts over the next few days. Is there any support at these levels? We want to see some good buying coming in and a bit of a bounce in the share price. But even if we see a bounce, maybe it's a dead cat bounce. So a nasty looking chart for Credit Corp, a fairly negative update from the company, but I do think it might be only short to medium term negative conditions for the company, and things might turn around fairly quickly for Credit Corp, or maybe it's going to be a protracted negative period for the company. I just don't know, because I'm not that knowledgeable about this company. But history shows us that when the economic conditions do turn fairly negative, this company is significantly negatively affected. So this company is definitely cyclical, just by looking at the chart. Just by looking at the chart, you can see that this company is definitely cyclical. So if you have any questions about Credit Corp, if you are a shareholder of this company, were you surprised by this announcement? Pretty negative announcement from the company. What are you going to do with your shares? That sort of thing. Do you think there's any value in this company at $12? Love to hear your thoughts, your opinions. So leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.